What are your favorite investments and why?
I invest my money in 5 places: real estate, stocks, startups, or companies, we'll call them, cryptocurrency, and commodities, things like gold. I love real estate because it gives cash flow and it gives me legal tax breaks. So when I invest in real estate, I'm buying properties for the long term that I believe in. I'm investing in areas where I think that money is flowing into. I'm investing in places where businesses are coming because I want to own a property where I know money is flowing to, where people want to be. That way now I can start creating predictable cash flow. And I like real estate because I don't trust myself. If I spend all the money that I have today, now I know that I'm not going to do that, but if I did, next month I'm going to get another check from my real estate properties. Second, I invest in stocks because I believe in the American economy. I believe that we are the strongest economy in the world, and I believe that we are going to continue to thrive. Obviously, we have issues, but I believe in the American economy. So in the stock market, I have 2 different strategies. I have more of an active strategy and a passive strategy. Every week, I have money that leaves my account that goes into the ETFs that I want to invest in, that give me exposure into the general stock market and into sectors and innovation that I want to be investing in. So that happens when the market is up and when the market's down. Doesn't matter what's going on in the market. That's just always happening. Then I have an active strategy, kind of like with real estate, where I'm looking for companies that I believe in, that I think are undervalued, that I want to own for a long time. So that's my active side in the stock market.
Which one do you think is better for you?
Both. You need both. I mean, I like the economy. I like investing in individual companies. Now, not everybody can invest in individual companies. Not everybody should be doing that if you're not willing to read earning statements, if you're not willing to study cash flow statements, if you're not willing to study a company. You shouldn't be investing in individual companies because then you're more prone to making mistakes. You're more prone to getting emotional because you don't really understand what's going on. But if you're willing to do that, then it can pay to invest in individual companies. Then,
so if you don't have the time to invest actively, then you shouldn't do it.
Yeah, if you don't have the time to actively invest into individual companies, stick with ETFs. It's an easy way for you to get exposure to the general market without having to worry about trying to pick the perfect stock.
Doesn't that build wealth slow, though? Doesn't that get your money really slowly?
You're mitigating risk, less potential upside, but you're mitigating your risk.
Yeah, but more risk, more reward.
More risk, more reward, and you have a higher probability of losing your money if you don't know what you're doing. You can mitigate your risk by learning. And if you're not willing to learn, don't take on the higher risk. Then you're just gambling. Mm-hmm. So if you're not willing to take on the higher risk, if you're not willing to learn, then don't take the higher risk. But if you want to invest in individual companies, you will get the best returns if you're willing to learn and put in that time.
Right.
Then I invest in companies. Obviously, Minority Mindset is a company that I own. Then we have startups that I invest in. I'm an investor in a company called Up Counsel. So I am an attorney. I'm also an entrepreneur. Up Counsel is revolutionizing the way that people and businesses can get access to legal work because the whole legal industry is so fat. It is so expensive to get legal work and it's so hard to find legal work, but Up Counsel is trying to change that. It's essentially, you could think of it kind of like a freelancing site almost for lawyers, where now lawyers can come and bid on jobs and you can post your job, that whatever it is that you need. So it's easier for you to find an attorney. You have attorneys bidding for your work and you're going to pay less here on Up Counsel than if you went to a big law firm and tried to get a good attorney there. So I like working with companies. I like working with entrepreneurs. So I invest in startups. I invest in companies because innovation is what we need to save America. Innovation is what we need to save this country and the economy. Then I invest in cryptocurrency. So kind of like with stocks, I invest in cryptocurrency through an active and passive method. Mm-hmm. So I have a dollar cost average strategy in cryptocurrency where every day I have some money going into a few different cryptocurrencies that I like. This is happening, whether it's up, whether it's down, doesn't matter. This is happening every single day. And then I have more of an active strategy where if I see a bigger crash, I will go in and buy cryptocurrency. And likewise, I have moved a big chunk of my savings to stable coins in cryptocurrency. So stable coins are supposed to be stable. They stay around $1, right? So you have stable coins that are pegged to the US dollar. They stay at $1. One stable coin is $1. But if you move your stable coin in a specific account, you will be able to earn interest on your stable coins. So my stable coins pay somewhere between 7 and 8.25% interest a year. And that's a lot better than what I get at the bank, where I'm getting 0.01% a year. And I can move my cash out anytime I want. I can sell and move it to another cryptocurrency. I can sell and move it to the stocks. I can sell and move it to real estate. This is the cash that I have waiting to be invested into any other active deal. So that's where I keep a big chunk of my cash.
And that interest rate is great, but I think a lot of people are really concerned that cryptocurrency, I'm investing in it today, but it might not even be around next year.
Why would it not be around?
All these government regulations coming out, there's not a lot of trust behind it.
You cannot regulate away from cryptocurrency.
Yeah, but they're trying to. So you're pouring money into an investment that might not even be around in a year.
China is trying to regulate transactions in cryptocurrency, but you cannot stop cryptocurrency. Cryptocurrency is not controlled by a central agency. If you don't understand how cryptocurrency works, it's not controlled by a central agency like our dollars are. Our dollars are controlled by the government and the Federal Reserve Bank. They can manipulate our dollars by printing more money, and they can control our money supply. In India, a few years ago, they, at the click of a button, said that no longer are a certain note, I think it was like the 1,000 rupee note, is no longer allowed. So people were hoarding these 1,000 rupee notes, and there was like it might have been the 500 or the 2,000 rupee note. I don't remember exactly, but essentially all these people who were hoarding onto tons and tons of cash, because of what the central authority, the government, said. Now all of a sudden, people's money was deemed worthless. You cannot do that with cryptocurrency because it's not controlled by a central authority. It's controlled by the people. They're called nodes. Nodes are computers. So cryptocurrency like Bitcoin is controlled by nodes around the world. You don't have a central authority controlling it. Are you going to see governments try to regulate it? Sure. You're going to see that happen in the United States. But you're also seeing adoption of it. You're seeing countries adopt Bitcoin as their national currency. The United States has its first Bitcoin ETF. Now, I'm not buying the Bitcoin ETF. Personally, I'm buying actual cryptocurrencies, but it's showing you that it is being adopted. And it, at the time of us recording this video, has a market capitalization of around $3 trillion, all of cryptocurrency.
Right.
You cannot just turn it off. We're talking about trillions of dollars of people's money in cryptocurrency, and it's not controlled by a central authority. So you talk about regulation, it can't just not be here because it's not controlled by one person. It's controlled by nodes around the world.
And I completely agree with you. As far as it being the currency of the people, that's great. And a lot of people are investing in it because of that. But governments in a lot of places around the world, they control the people. And if the people can't access the currency, how are they supposed to spend it? So in China, for instance, you talked about them trying to control the actual, transactions of the currency. People can't have access to it. You can't mine it. You can't spend it. You can't hold it. The government's going to find you. What if that happens everywhere?
It can't, and it won't. You have countries around the world that are already adopting it as their reserve currency. El Salvador has already done that. And even if the government creates restrictions on it, that doesn't mean that you cannot access it. There are ways around it. You can use different VPNs, you can get around it, and you will see people leave because of that purpose. Now, China is a communist country.
Right.
It's different than the United States in a free market. If the United States government came out and said that transacting with cryptocurrency is illegal, cryptocurrencies are illegal, now what they're doing is they're infringing on private rights. Because you also have exchanges like Coinbase, which is a private entity in the United States which trades on the public stock market, which means they're now making these companies no longer possible. And they don't have the ability to do that. People are starting to use cryptocurrencies. Banks are starting to use cryptocurrencies. You're already starting to see the adoption. You're going to see probably the Federal Reserve Bank create their own cryptocurrency. We did an interview with Raul Paul where I sat down with him and talked about similar questions like this. The Federal Reserve Bank will probably create their own cryptocurrency or a pseudo cryptocurrency, but you are not going to see a shutdown.
So if you see a bunch of people, just because a bunch of people have it and they want to spend it, if people aren't willing to take it, then it's pretty much useless, right? So you don't see people are taking gold. We don't see people going to stores and spending gold because the United States is not backing that like they used to.
Yeah, but gold is a real money. It's a representation of value.
But I can't spend it.
Yes, you can. You can turn your gold into dollars or any other currency that you want anywhere in the world.
I have to exchange it.
Yeah, but people will still accept gold. If you came to me and said, hey, can I buy your shoes? Here's a bar of gold. I will say yes.
Well, maybe not my shoes.
You can exchange gold for things, right? It's just, what is somebody else willing to accept? And cryptocurrency is being more widely accepted every single day. You're seeing more and more people move to cryptocurrency. In 2017, you saw this massive boom and bust in cryptocurrency. You had a lot of people coming into cryptocurrency who had no idea what they were doing, but they were excited by the idea. Now we're seeing another boom in cryptocurrency. We could see another crash, but you're seeing way more people adopt and use cryptocurrency now than you did before. It is, again, you need some people to accept it as currency, which means you need people to value it. Okay? And every single day you had more and more people valuing cryptocurrency.
But it doesn't really work like that. There's a lot more to becoming wealthy than just having a big salary. I mean, it can help, but if you don't know how to use your money, or if you don't have the right mindset, or if you don't know how to pay yourself, or if you don't have the right patience, then it doesn't really mean anything. It's all about what's in here before you make the money. If you actually want to become wealthy, there are 5 things you need to do.